What's up everybody, Tom here with another video. In this video, we'll be doing our weekly look ahead at the markets across the world, including the crypto markets, stock markets, commodity markets, and more. We'll also be taking a look at whether the Fed is going to announce the start of tapering, which is becoming the expected thing. We've got jobs numbers coming out on Friday in the US. We've just seen one of the biggest earnings weeks possible. And of course, we have plenty more left to go. Will this be the week of volatility? Stay tuned to find out more. All right, well, we'll start this video by discussing the G20 leaders endorsing the global minimum corporate tax deal for 2023 start. This is, of course, the tax deal that discusses 15% minimum tax to be paid by large companies across the world. And we'll see whether it does end up eventuating. It's not that it's unexpected, so don't worry about that, but it has been something that the markets have discussed for some time. Let's take a look now at the actual heat map here of the S&P 500 for the Friday session. And you might look at it and say, oh, Apple and Amazon were down. Believe me, they were down a lot more before this market opened. And of course, what was happening was we had that bad earnings result from both of them. They went down post-market. They hit some key supports that we'll discuss soon throughout this video. And then Apple rebounded straight back into resistance around the 150. Another surprising stock was Tesla, another 3.43%, backing onto another 3% day. And of course, those massive 20% plus moves that we've seen over the last week. Phenomenal time here for Tesla traders, and I'm sure many of you are happy. We've been very bullish here in the TA on those charts. Let's now take a look at the week in the past in terms of which sectors were best. And actually, surprisingly or non-surprisingly, it was XLY, consumer discretionary, doing very well, and what is a seasonally strong time for it coming into November. We've got Black Friday sales, we've got Cyber Monday, we've of course got Christmas, and people are scrambling to get their orders in before what is perceived to be a massive supply shortage. So while it might be hurting Amazon to a degree, many people in the consumer discretionary, those stocks are doing quite well. Technology was doing well. We also saw that movement out from healthcare, which is very interesting. We'll talk about that soon. And we had IBB coming in strong, 0.73%. And while it doesn't look very good, these are breakouts in the healthcare sector and biotech sector that's been doing nothing now for about 3 months. Speaking of doing nothing for 3 months, take a look at this chart, guys. So this actually shows you the last 3 months of relative performance of all of the different sectors. And most people, if you said to them first, which has been the best performing sector in the last 12 months, not many people would probably say energy, but it wasn't just 3 months of outperformance by energy. It was full 12 months. Very strong numbers here, 15.24%. We'll just zoom in here quickly to show you what we're talking about. When we're talking about 3 month performance, we're using this chart to get a bit of an idea of rotation and whether rotation is getting stronger or weaker. Now, if you have energy with such strong numbers for the year, you're hitting those kind of key resistances on US oil, etc., and you've had 1 week of sell-off, it's inevitable that with oil or with energy or with anything, there's going to be lulls, there's going to be spikes, etc. So this could be an area that's actually rotating out of. But we did mention healthcare before. It's actually done a 0.05% return in 3 months. And if you were invested only in healthcare, you'd probably be crying in comparison to some of the other sectors. But this is what happens. It breaks out, healthcare starts to outperform, it has 2 to 3 months, the rotation continues. And we talk a lot about this in our course. We talk a lot about this, of course, just in general on this channel. And the reason why is because understanding these rotations is really important. So remember, look at your rotations, look at your sectors, and notice breakouts when they're occurring, because certainly that has happened recently on healthcare and some of these more downtrodden sectors. Because we're in earnings, we also want to watch generalized health of the market. And one of the ways we can do this is by looking at the beats data. Earnings season beat rate, 77%, very strong numbers. Remember, when it's above 70%, everything in the fundamental side is a tick of approval. And as long as there's a good guidance coming with that, it's a tick of approval as well. And the markets are just going to act technically, but we shouldn't be worried about necessarily, big crashes or anything, because really the earnings are absolutely performing as expected. Let's go through the earnings for the week ahead. And we've got some interesting ones here. We've got some of the ones that people like, Pfizer, Corsair. We've also got Roku. I believe the skills people like, Fastly, Etsy, Airbnb, Pinterest, Square, Moderna. Plenty of big names, nothing like last week in terms of mass earnings of the big FANG stocks, but there's still some big numbers in here. And if you're in these stocks, remember to always get this report and always have it on hand just to be aware of when the big stuff's coming out. Let's now take a look at the SeasonX data so we can understand where we are in terms of the cycle, in terms of the year at large. And I think when we're taking a look at this, it's pretty much played out exactly what you would expect. We had that seasonality kind of weakness coming through the Feb-March period. We had strength coming off that, which we did expect. We had that August sideways action into September down, which again is quite an expected type of market. We've seen October ramp. So what now happens in November? Do we get that initial November boom into a little bit of a bust, into a resumption of the boom? I think this is most likely the scenario that we see. Basically, this is a standard market. This is a standard pullback. As you can see, we've got plenty of years selected above. And if it plays like this, well, it plays into our technical games. Remember, when the market's looking bullish, what can you do? You can only really look towards the bull side. You've got to follow that price action. And our opinions really don't mean that much until the price action changes. And then you can start to say, okay, we're looking bearish, etc. VIX, or volatility index, spiked through the big earnings last week. They've now come down a little bit. You'll notice the fear is coming back out of the market. When the fear comes back down to 15, we get interested in potential short-term trades for the volatility side of things, because we know the 15's been a bit of a spike point for the VIX. And at this stage, it's trading at 16.27. So basically in the middle of the zone, and we'll continue to watch that throughout the week. Another one is going to be Apple. And I wonder if anyone in the chat or anyone in the comment section did pick this one up on Friday. If you did, let us know in the comments down below. Let us know what your expectations are for Apple until the end of the year as well, guys. I'm very interested post earnings to see what people think this stock can do. So it hits that 146 area. This is exactly where we expect it to pretty much bounce off. You can see the little red box here that we've drawn. We've had that there for now, what, a week. And the reason why it bounces this kind of zone is because it is basically a 50 exponential and a 20 exponential moving average. They've crossed to the upside, which is bullish in itself. You can see the big volume coming back in here for Apple. And you might say, but the report wasn't so good. It wasn't, but Apple is still down from where it has been in September. It's still sideways since the July period. And realistically, that's the most important thing. If Apple's done nothing for quite a few months, then really, is it relatively cheap considering the company is still churning money, making more, etc.? Some of people in Wall Street will look at that. There's also a dividend coming up, which is negligible, but some people like to look at it. So what are we looking at this week? Well, this 150 has been a critical area on the technical analysis. We did get a close above, but that was ahead of earnings. So let's see if we can get a post close above 150, because that's where all the options have been as well. And when we take a look at the options for the week ahead, what's going on with Apple? Well, Apple's options have moved higher. And this is the first time we've seen this. So we've been watching it for, what, a month? And since we've been watching it for a month with the options calls, there's always been a huge call wall at 150. This week, there's less calls at 150 than ever before, and a lot less calls underneath these strikes, underneath the 150 in general. So it looks like Apple is set to potentially move higher, and the 150 is not going to be as important on the key technical analysis and resistance. We're going to have that 160 area really being the force or the fighting area for the bulls and the bears throughout the week. So we'll watch that zone, watch the 150 on the intraday, and see whether it can break above and then start to move towards that 160 zone. Amazon's another one that's worthwhile watching at the moment. It bounces off the support zone around that 3,300 area. Basically, this stock looks like bad earnings, looks like poor guidance, but again, how long's it been here for? It's been sitting at the same price now since July 2020, and some people find that unbelievable, and I don't blame them. I mean, the move to online shopping, yes, Amazon's come into problems with the supply chain stuff, but this stock has literally not returned pretty much $1 since July 2020. When you consider them where the market is from then, wow. So Amazon has this downward trend line on it, and if we take a look at the weekly, we have a fairly compelling story coming up here, and we have quite a few compelling things to discuss. So we've got a downward trend line. We know that if we close above this, we usually get what we call repair in the markets. And a repair is effectively where the price action has moved through a key resistance. It said, you know what? We're no longer in a downtrend. The bears don't have control of this market. Bring on the bulls. Bulls on parade. Let's go. Just like the Rage song. And we have here a big bullish hammer that's come off the bottom base, showing that there is clear demand here. We've got the big bullish follow on, the test of this resistance, and guess what last week was? long leg doji. So effectively we have a low, we have a high, and the market is closed and opened at a very similar point. If we therefore get follow through action and we get a weekly closure above this 3480 area, it basically means decision made, and it allows the bulls, even with the bad report, you might find this hard to believe, but this is the thing with price action and what ends up happening, that it could push into that 3,900, 4,000 in what is seasonally a fairly strong kind of month for Amazon. So yeah, very important zone, great resistance here this week. What does everyone think about Amazon as well? Is it going to go bullish? This is the first signs of recovery we've had in this stock in a long time. And you would be wrong most of the time thinking this thing was going long. So let's find out whether this zone is where it's at. I believe that it's looking a lot better on the charts than it has in the past. Speaking of better on the charts, whew, this thing's a beast. Tesla does not stop. 1,114. Still incredibly hard to short against this right now. 2-hour 20 is the only thing that people might be looking at in terms of little dips and pullbacks, just because that's the last pullback moving average that we had. But we take a look at this on a weekly and it's pretty extreme. Huge weekly moves, huge gaps. Does Tesla tend to fill the gaps? No, it actually doesn't always fill the gaps. This is one of those stocks that can make a gap and we may never fill it, or it may take a very, very long time. Monster closeout here. The monthly is just huge as well. Look at that one. Just a massive month for it. Let's actually take the distance here from the bottom to the top. It's a 45.83% month on a stock that was already worth a lot of money. So yeah, Tesla's been pretty good for it. Where does it stop now? A lot of people ask. How do we figure out where it's going to next? It's going to be difficult. You're only going to be able to use things like psychological numbers really, or pivot points. And I think you'll have to see the new pivots open. We'll discuss it. And yeah, it's going to be somewhere around psychological numbers and a pivot most likely. That's usually what stops markets. You'll notice it stopped just around the 900 here, a psychological level. Now that's got past 1,000. Could it be 1,500? Could it be 1,200, 1,300? We'll have to look for more information. But in general, most markets will stop like this. They'll kind of hit a high, consolidate, hit high again, create like a double top pattern or a triple top pattern, and then break down and consolidate for some period. So we'll continue to watch Tesla, but well done at this stage, still looks bullish. Speaking of other weird kind of commodities that haven't been doing well for a while, that is going to be silver and gold. Now, silver and gold can have good back ends to November, but silver has bounced off that first level we discussed. So the previous resistance, 2050 moving averages on top of each other, dynamic support, strong level for it. It did bounce. It's not out of the problems yet. This is just a decent support area in what's been an okay trend for silver recently. But this key resistance up here, 2480, we're going to watch that. We're going to watch how this interacts with that zone. If it closes through, remember that could really start a huge participation phase for silver. And you take a look at it on the charts. If we take the distance down here, and we consider this could be a right shoulder. Remember, if it sits around for a while, then breaks through, left shoulder, head, right shoulder, the continuation could be upwards of $28. So silver bugs, gold bugs might be coming back into phase. Remember, everyone hates gold and silver right now. I mean, not everyone, but the general sentiment is all on Bitcoin, all on the crypto markets, and almost everybody dislikes gold and silver. And I find that when everyone hates something, especially when there's a seasonal coming in, if we see strong technicals, I'm not going to ignore that. I'm going to see that as a positive for me because it could be a bit of rotation of big money after everybody kind of runs away from it. Speaking of rotations, Nasdaq just so strong. Starts the day on Friday down. Looks like it might want to return to that 20 and it says, not yet, guys, not yet. Maybe we have to go hit the top of our trend line first. This is the trend line we have on the Nasdaq. We've been using this for quite some time. Big ascending channel here. Fantastic TA. Let's, I guess, hope that it just goes up to here. I mean, that's got to be the expectation now. Something like that and this type of thing. Remember, we had that strong start to November, little bit of weakness, and then continuation coming into the end of the year. Something like that, maybe with a bigger downtrend in the end of January, February in 2022. What do you think? This seems like the likelihood of the way that it's trading at this stage. Still far away from the 20 moving average on the daily, but it just made a new high. It cracked past those two bearish candles. There's very little bearishness. There's absolutely no follow through on either of these candles, which means day traders and algos weren't able to get involved, and most experienced traders wouldn't bother trading short there, and it just keeps going strong. So we had to switch to being bullish down here. There was no choice. Once it closed through those moving averages and creating the lightning bolt, all the bearish action was taken out. The downtrend was taken out. And at this stage, we're still looking bullish on these charts. NDX or QQQ, let's have a quick look at QQQ for you guys. It's the exact same thing, of course. There's your top end channel range. This is the breakout, and you've got the numbers there. So some interesting stuff, but again, the Nasdaq looks strong. Let's move over to the SPX, because while we don't have this open yet in terms of the new pivots, I think pivot points might be what we have to start using a little bit. We've got our upward trend line. So you'll notice that goes through the previous kind of resistance highs here. And very similar to the Nasdaq, it will hit at the same time. That's fairly likely to be a key level. Now, if we continue to move bullish and we get our new pivots, which are these green lines here, and an R1 opens, let's say on the top of the trend line, is that going to be even stronger signal that we've hit kind of a peaking area? Absolutely. And we'll be watching that throughout the next week. So make sure you subscribe, because we'll be covering it once we get the new pivots opening come the Monday session. So I'm super excited to find that out. And hopefully we get 2 or 3 things lining up, stacking on top of each other to give us a great signal that, of course, we've got a little bit of resistance. We're going to see that bit of pullback. And if it all times well with our seasonals, even more fantastic. SPY is the same thing. We've got that top trend line here. We'll just quickly bring that down to get it correct. There we go, through the top. It should line up with a pivot. We'll be taking a look at it. And we are still quite far away from the daily 20. So we've got to be cautious. But if you're long, is there a sign of negativity yet? Not yet. It still looks bullish overall. When we go and have a look at the options for the week ahead, we usually look for call walls or put walls, etc. Still heaps of puts in the market. And overall, that's usually a positive sign towards the bulls. Remember, when there's less puts in the market, or there's only 1 or 2 strikes, more likelihood the market can come down. When there's a ton of puts in the market, you'll find the market usually starts chunking up. And there's only one big call line here, which is sitting on 460 for the SPY. Other than that, really very little major expiration happening come the Friday, the 5th of November. Bitcoin defies so many things. We had that bearishness come into the market. No doubt it's a close below. It looked like it faked out. It then came down and grabbed a lot of people's stops. And that's why I'm only really looking at the bull side here on Bitcoin coming to the end of the year. I'm still very bullish on it in terms of the seasonals. And it then bounced straight back up, and it's broken above this little downtrend here. It's then found support. Will it keep going along? It's kind of difficult to really predict at this stage. That is definitely a false breakout at this point. I mean, it broke low. You would think it was going to go the distance of the ABC. And what I mean by that is if we pull the same lengths, this is the first length, the A, the B, and then usually get the C move, which is the last move here. And generally, you also get a pullback that's very similar to the previous pullback. So in an ABC move, you get this move here. The pullback's very similar, and then moves forward with the distance. So you would take the distance from here to here, and it would predict around a 78, 80K Bitcoin. Now, I still think Bitcoin can even do bigger numbers than that come the end of the year, depending on how Thanksgiving and the run into that event goes. But this was the thought process at this stage. A few alts have started going a bit better. Ethereum, of course, finding more strength than Bitcoin at this stage. Is this the beginning of the alt season that we usually see? So we get Ethereum showing strength, then we get that Cardano, Polkadot, Chainlink, whatever else is out there starting to find even further strength. Possible rotation based on Ethereum holding much stronger than Bitcoin at this stage. So look for Ethereum, have a look at this on that 4,400, 4,500 area, because once it breaks through that, it could get a little bit explosive, and we'll be continuing to watch it. Stocks like, or coins like SHIB seem to be really struggling here. It had the dead cat bounce, very systematic dead cat bounce here to the 78.6 fib, sold back down, little bit of extra rally. This seems to be hitting that kind of mass saturation, and everyone's super excited about it. So it's usually one of those times to stay away. News ahead of the week. What else do we have here? We've got US ISM manufacturing PMI, Monday, 10 a.m. ET. So that's New York time. And then we scroll down here and we've got the unemployment non-farm numbers. We've got ISM PMI. We've got the FOMC press conference, their statement, OPEC meetings. My goodness, it doesn't get any less, does it, here in the slightly smaller earnings week? And then we have the big one, non-farm employment change coming out Friday. So expect some volatility, expect a little bit of uncertainty in the markets, but at this stage, the price action still looks quite strong. Thanks so much, guys. If you enjoyed the video, please remember to subscribe, smash that like button, and join us for the Monday close, as we always do it half an hour before the Monday close. We're going to start doing 1 hour before as well, just out of feedback from you guys. And I hope you've been enjoying the channel. If you have feedback, put it in the comments down below. It always helps us out. And I want to wish you all the best weekend possible. Bye for now.